What a week we had in the markets. Starting out the week, we were operating at extreme fear. Tons of things were oversold, and many of us thought that everything would continue crashing and we would turn this into a bear market. However, I hope you guys stayed optimistic because as we saw how strong of a rebound we had in the markets, especially the Nasdaq, we closed at all-time highs. This is KCG Trades, and this is my stock market outlook and weekly watch list video. So getting right into it, starting with the Nasdaq Composite, as we see here on Monday, we had an ugly gap down that found support right at that breakout retest level. And as mentioned last week in my video that this might be a possibility, and we did so perfectly, and we actually had a nice reversal, had a nice candle, and for the past 5 days, Monday to Friday, we had straight green days closing at all-time highs, which is exactly what you want to see after a pullback. But what made this rally even better is we had a much more broad participation and not just the large cap names leading the way. Not only did we see breakouts working, but we also saw earnings gap ups that held, so a lot of good things are going on in the markets right now. We also saw a lot of growth names lead the charge, such as Roku. We had a huge day on Friday on strong volume showing institutional accumulation. We had DocuSign close at all-time highs at 310. We had C Limited hit that 300 all-time high mark but closed right below it. We had Cloudflare close into all-time highs. So tons of growth names are coming back, leading the charge in the market, showing us that this market is ready to go higher. So I definitely am continuing my thesis of being bullish on the market. However, taking a look at the QQQs, which is still the Nasdaq, I do see a bearish wedge here, which is like a rising wedge. It was on lower volume as well for the past 3 days, and we are a little bit extended off the 10 EMA. Now, like I said, I'm still bullish on the market, but I wouldn't be surprised if we saw some back and fill, maybe just a few days of consolidation, or maybe just a pullback to the EMAs, just so the EMAs can catch up to price and not too much bullishness comes into the market. The good news is the market is still operating at a fear level, not extreme fear anymore, but still in a fear level, which is crazy because we are in all-time highs, and other oversold indicators are no longer oversold, but we are not overbought. So that's good to see as we could continue higher, and the fact is sideways action, a little pullback is not bearish at all. And if we take a look at the S&P 500 here, we still have that same action as the Nasdaq, closing all-time highs, but we are having that little bearish wedge, that rising wedge action. So like I mentioned, the same thing with the Nasdaq. I wouldn't be surprised to see some back and fill, just some pulling back to the EMAs, just so we could continue higher and not get too overextended. So if we take a look at other indexes and ETFs that I'd like to take a look at, starting with the Dow Jones Industrial, we had an ugly Monday closing below the 50-day moving average on strong volume, but Tuesday to Friday was a strong recovery, good reversal, and closed at all-time highs. So that's exactly what you want to see, and there's definitely lots of room to run higher. If we take a look at the IBD 50, this is still in a chop zone, and we were actually under the 200-day moving average, but the 5 days we just had was amazing. As I mentioned, growth was really leading the way, so it was nice to see IBD 50 catch some of that action as well. So we closed back above the 200-day, 10 EMA, 21 EMA, and 50-day moving average. So we are back above all of our moving averages. The volume was very significant as well, except for Thursday. Now it's nice to see we are back above all the moving averages, but there's definitely lots of work to be done to get this back to a nice looking chart. So keep an eye on it because this is definitely a good start for a new potential uptrend. And if we take a look at the IWO, which is the Russell 2000 Growth ETF, we undercutted the 200-day moving average. We had a beautiful reversal here, and we saw some 2 days of just sideways action along the moving averages above the 10 EMA, so that's good to see. So next week I really want to see this get above these moving averages and clear that 302 zone, clear that so we could potentially retest that 313 level. We take a look at the IWM, which is the Russell 2000 ETF. As I mentioned last week, nothing was bearish that was going on. It was just stuck in a consolidation, and that's exactly what we saw. We just retested the bottom of this consolidation zone, bounced right above it, so it was a perfect retest, bounced right above it, and very similar to IWO, I had those 2 days of sideways action, finding some support around the 10 EMA. So like I mentioned with IWO, I would like to see IWM get above these moving averages, get above that 222 level, and just get above it, ultimately above that 225, eventually retest those 230, 235 levels, and eventually get above it and go into all-time highs. And if we take a look at the VIX, which is the volatility index, we see here starting on Monday, we had a huge gap up and it closed above the 200-day moving average. But then throughout the week, obviously as the volatility reduced and the market just continued grinding higher, it came back down all the way to the 17s level. So that's good to see. What I learned over the past week was that when there's a huge spike in the VIX, A huge spike, that's usually the sign of a short-term bottom. So the fact that we got that and just continued to grind lower here is a great sign. And we take a look at ARKK ETF. We see here we were flagging below the 50-day moving average, undercut it, rallied, got above it, and now we're back above all the moving averages, and we're finding support at the moving averages as well. So that's great to see. Now if we could continue higher, slowly grind higher throughout the summer, throughout 2021, that would be great and obviously ideal. So taking a look at a lot of these indexes and ETFs, it shows us that there is a lot of strength in the market, and there definitely is lots of room to run for the rest of 2021. And to show what I showed you guys last week, starting with the fear and greed index, as I mentioned last week, we were at extreme fear around the 18 level on Monday. Now we are at 32, which is still fear, but not as bad as before, but it is good to see the market still operating as fear. It means that we could continue higher. If we take a look at the put and call options, it is still at extreme fear as a part of investors. We see here extreme fear. And if we take a look at breadth, we are still at extreme fear. So that's exactly what you want to see when the markets continues higher. Obviously, when everyone is too bullish, everyone is bullish, everyone thinks stocks only go up, that's when it is more dangerous. But when people are more fearful, they're not investing as much money, that's when a lot of lockout rallies happen, and that's when significant moves can occur. And if we also take a look at NAMO, which is the Nasdaq Oscillator, it shows we were in very oversold territory and we had a nice recovery, but we are still in the medium zone, so we're not overbought, not oversold anymore, so that's good to see. We have room for flexibility. And same for NYMO, which is the New York Stock Exchange one. We were at extreme oversold levels at the beginning of the week, and we had a strong recovery, so very similar. We're in the median zone, so that's great to see because there's lots of room to run higher. So with that being said, like I mentioned, I am very bullish going forward. Wouldn't be surprised to see some back end fills, but there are 7 stocks that I'm watching for my watch list for this week, starting with CHWY, CHWY. So CHWY has really strong growth estimates for the next 2 years, and for the past 8 quarters, it has had accelerating sales and earnings growth. So this is definitely one to watch. In terms of the chart, it has been ugly as of late, especially in 2021, but it does seem to be bottoming out nicely here. We do have a bit of an inverse head and shoulders pattern here, and I'm really looking for this move to get above 88.50 cents for a breakout into new territory. Obviously not new all-time highs or anything, but new territory after being in this consolidation for a bit. I really want to see it get above that level on strong volume and close above it, and that would be very, very significant for the stock to resume its new uptrend. So that's pretty much it with CHWY, and the next stock I'm watching is CrowdStrike. It had a beautiful falling wedge setup on Monday, and for the next 4 days it just continued higher. Tuesday and Wednesday it was lagging compared to everything else, but it was kind of just setting up for another move higher. Thursday and Friday kind of blasted off on strong volume, and Friday we actually did touch all-time highs, but we closed right below it. So essentially I'm looking for a move above this 270 level and a close above 270, which would be its highest close ever. If we did so, that would be A++ for this stock. So I wouldn't be surprised to even see some sideways action, maybe even a small pullback for the EMAs to catch up to price and then blast off higher into new all-time highs. 300 is the level coming up, so I'd really want to see this hit 300 in the next few weeks. That's pretty much it for CrowdStrike. Just keep an eye on this 270 level, and the next stock I'm watching is DoorDash. So DoorDash has really been impressing me with its price action for the past few months. After having this gap up, after having a new low in May 2021, it just has been acting very right since, basically moving along its moving averages, breaking out above this 168 pivot and pulling back, retesting it on very insignificant volume, and then retesting it and going back higher, bouncing above it to new 2021 highs. And we see there's lots of room to run to the 200s and potentially retesting these highs over here. DoorDash has been acting very, very well, and I'm looking for a breakout above this 188 level, basically just continuation. Maybe we get some sideways action just for the moving averages to catch up a bit, but I'm definitely interested in getting into this stock, not only because of its technical reasons, but also because of its fundamental reasons. So if we take a look at MarketSmith real quick, and sorry, I did mention DoorDash just hit new 2021 highs. I actually meant 3-month highs, not 2021 highs, sorry about that. But in taking a look at the sales numbers for DoorDash, I'm just going to move myself myself real quick so you guys could see it. Sorry if it is a bit blurry. Taking a look here, sales for the past 8 quarters have been growing above 100% each quarter after quarter, and we had 1 quarter of 310% growth, which is amazing. Earnings is slowly getting to profitable, not there yet, but the growth is substantial, going from negative 140 to negative 36 to negative 5 cents. So that's great to see. Earnings is starting to catch up. Sales have been increasing significantly, and the chart is starting to show that there's lots of growth heading its way, which is why it's starting to get some strength here. And if we also take a look at the institutional ownership here, we are starting to see some growth in institutional ownership, and there is one high quality fund in Fidelity that has invested in DoorDash. So this is exactly what you want to see in new IPOs. You want to see funds buying up the stock to push it higher. So that's really what I'm watching for with DoorDash. And the next stock I'm watching is Pinterest. So Pinterest actually has earnings this Thursday, July 29th. So there's no real setup that I'm watching for this coming week until earnings get out of its way, because you don't want to buy before earnings, especially with no real cushion. So essentially what I'm looking for to see how it acts after having a gap up on Friday. It gapped up in sympathy of Snapchat's earnings. Ad tech is doing very well right now, and we saw Snapchat have significant growth in earnings, which is why they had a huge gap up. So I'm really looking for the same thing in Pinterest. If we could get a gap up on earnings into all-time highs, that would be amazing. As we saw in the past, Pinterest had some really nice gap ups in July and in October. So if we could get that once again, that would be beautiful. But for now, just paying attention to the stock to see how it acts, and really looking for that earnings on Thursday. That's pretty much what I'm watching for with Pinterest. The next stock is Peloton. So Peloton had a really strong Monday and Tuesday after retouching the 50-day moving average, gapped up on Tuesday, and Wednesday, Thursday, Friday kind of just back and filled that gap. Friday filled it perfectly and reclaimed the 21 EMA as well, had a nice reversal. So essentially what I'm looking for the next week is basically if we could get back above these levels, get above that 127, continue higher, and really get above that 130 level. For the past few months, it's been stuck in a consolidation zone. So I really want to see it get out of this turbulent zone, get back above it, and see if it could continue higher to a new uptrend. So Peloton is the one I'm not as strong about compared to the other stocks that I showed, but this definitely has potential to continue higher if it could find some strength. So that's really what I'm watching for. And the next stock is C Limited. So C Limited has been acting very strong as of late, and there's a lot of positive signs with this stock. It retouched the 50-day moving average twice, and both times had really strong green days. And recently we just closed at its highest close ever at 297.67. We kissed that 300 level, but we didn't get to close right above it. But the fact we closed above that 290 turbulence level is very, very key and very A+. We've been in this consolidation since January of 2021. So if we could get back above it, get above that 300 Livermore level, and just erase it like we did with DocuSign. We take a look here. DocuSign hit that 300 level and just cruised higher, closing at 308.50, touching 310. If we could do so with C Limited, just get above these levels, get away from all the turbulence, that would be very, very bullish from the stock. For the stock, also, we're not overextended at all. We are just a bit above the 10 EMA, so I wouldn't be surprised maybe to get a more further extension than maybe a little pullback to reclaim the moving averages. But for this stock, I am very bullish, and I really want to see it get above that 300 level and never look back. So that's really what I'm watching for with C Limited. And the last stock I'm watching for the week is Snapchat. So as mentioned earlier, Snapchat had a phenomenal earnings report, and they had a huge earnings gap up that closed at new all-time highs and had 116 million shares traded that day. So this is phenomenal, exactly what you want to see in an earnings gap up, and the fact that closed near the high of day as well is very, very significant. So obviously there's no real setup as of yet, but for this earnings gap up, you definitely want to keep it on your radar to see if there's any potential entries given to you. We might have a red to green move on Monday that will continue higher, and then if we do so, I'll really want to see maybe some symmetrical triangle action going on. But what would be really important to see if we could hold this gap up as well as possibly hold this high volume close. So there's definitely lots of things that we want to look out for. No rush in getting into this stock. There'll be plenty of opportunities to do so, but this is just the beginning of a potential much bigger move. So keep an eye on it. That's pretty much it for this week's watch list. I hope you guys enjoyed. Hope you guys have been staying optimistic. And if you haven't already, leave the like down below, subscribe, share with your friends and family. Hope you guys have a wonderful week and kill it in the markets. Take care.